The shorts are in control of the markets. Ladies and gentlemen, we are massively down in the stock market today. The Nasdaq was down over 5%. Let's put this into a little bit of perspective. When the Nasdaq, S&P, or Dow drops over 7% in a single trading day, the markets get halted for 15 minutes. You are closer to seeing a market halt today than we have been since March of 2020, where we actually got two halts back to back. Markets dropped 7%, we got a halt. Markets dropped to 13%, we got a halt. We didn't quite get that 20% halt, and that would close the market. So what I'm saying here is this is either going to get a lot worse. Potentially we could even see a market halt by the end of the day today, or potentially we bounce back. But one thing is clear: the shorts are in control. Now, there is obviously a big reason, or a couple big reasons, why the markets are down so much today, and that's what we need to cover here in this video to put this into a little bit of perspective and give you guys this information, hopefully so you can come to a better educated decision on what you want to do with your long-term portfolio as well as your short-term trades. So we got some earnings here in after hours as well. We're going to cover everything you guys need to know. I do right off the bat want to point out the fact that AMC stock is holding up very well. And I know you guys are going to say it's down 6%. This is clickbait. You don't know what you're talking about. But let's also put this into a little bit of perspective here. AMC stock, if we close under 15, will be the first day in a very long time that we have actually closed under 15. You guys can see these intraday lows over the past 3 days. Now 4 days in a row going under 15. We'll see today, but if we close above 15, that will be 4 days back to back to back that we have went under 15 intraday and closed above 15 to end out the day. So we're actually showing a lot of strength. And if you look at something like a Square is down 10%. A lot of stocks are doing much worse than AMC. Square is doing twice as bad as AMC. AMC is holding up better or equivalent to something like Apple or Microsoft. Those stocks as well down about 5%. So I think this is a great sign at the very least, that AMC is holding some strength here today, because it's not looking so good. Now, let's talk about exactly what's going on today. So the biggest thing that came out in the morning today that really started to move the futures down substantially. Like when I went to bed, futures were up like 0.05%. And then when I woke up this morning, pre-market, we were down almost 1% on the S&P, down well over 1% on the Nasdaq. But it says worker output fell 7.5% in the first quarter, the biggest decline since 1947. Worker productivity fell 7.5%. At the same time, labor cost as measured against productivity soared 11.6%, bringing the increase over the past 4 quarters to 7.2%, the fastest rise in about 40 years. Now, this, I think, is having a bigger effect on the markets. It says weekly jobless claims increased to 200,000, well above the Wall Street estimate. Now, why this is so important, in my personal opinion, is because the Fed was asked a simple question yesterday. If unemployment rates start to go up, the jobless claims start to go up, GDP continues to fall, and the overall economic activity starts to slow down in a dramatic way, is the Fed going to hold off on raising rates? Fed Jerome Powell said no, absolutely not. Absolutely not would a 1 month or a couple month worsening data slow down the Fed's goal of getting to neutral or even going above neutral, which some people think neutral is 2.5% to 3% on the federal funds rate. We are far from that currently. We are in between 0.75% and 1%, and we're already seeing this kind of economic slowdown and growth fears here. It's basically saying that no matter what happens with the economy, we are going to get rate hike after rate hike after rate hike, and we are probably going into a very, very deep recession. And the longer it goes, the worse the data gets, the deeper people's interpretation of that deep recession is going to be. So yeah, that's why you really have the S&P down about 4%. You have the Nasdaq down about 5%, 4.98% right now. If we drop to 7%, you will get halted for the rest of the day. And the thing is, we're only about halfway through the day, the trading day so far. So, I mean, if it continues at this pace, you're going to be down 8 to 9%. You're going to see a halt, and that could freak out the markets even more. Literally, the shorts are in control today. Now, there are some other things that happened as well. Obviously, that is not the only reason why the markets are down 5%, but you also see this headline: Europe's economy is de facto stagnating, ECB's Panetta says. And there was actually basically a vote today to see if they should raise rates, and they concluded that they should raise rates over in the ECB. Rates in the ECB have been low for a very long time, but with that vote, about half of the Fed members, the ECB voting members, agreed to not raise rates. So there was a lot of disparity there between what the average Fed member thinks should happen. Like I said, about half said we should raise, half said we should not raise, but they're basically going through the same things that we are going through, but they are even closer to a recession, or at least that's what the data is telling us. So you mix China lockdowns, mix war in Ukraine, mix kind of a little bit of a hawkish Fed, kind of telling us like, hey, this is what's going to happen. We're going to raise rates regardless of what happens. And some of the verbiage that Fed Jerome Powell used. One thing that I called out in the Discord when that was actually going on, because I was letting everybody know what was being said during the press conference. But Fed Jerome Powell, this really stuck out to me. And I think the markets have been paying attention to this, and I think that's kind of what is helping the markets to come down in a dramatic way. Fed Jerome Powell said there is a really good chance of a soft or soft-ish landing. A softish landing would imply possibly a paper recession, a small recession, but not really a large recession. Now, you mix that with economic data slowing down, with a Fed that's saying, hey, no matter what happens, we're going to continue to raise rates. He literally said, if everything goes to shit, we will still raise rates by 0.25%. The balance sheet situation yesterday was great. The Fed said, hey, we're not going to start reducing the balance sheet until June 1st, and we're going to do it about half the pace you guys thought we were until September. Then we're going to ramp up to that fully expected $95 billion per month pace. That was good. Other than that, not too much good that came out of that. And the market's digestion of this is not so good. At the same time, you are seeing bonds making an historic drop today, down 3.56%. If we look at the bond market, where rates are currently at right now, it's not good. It's not good. 3.092%. This is literally vertical, and especially after the last Fed meeting yesterday, they've went up about 0.12%. So when you start to see this, it's telling you that one, people are selling bonds, but also stocks and bonds compete. So when bonds can offer you 3.09% risk-free, and you think inflation might come down here in the next 10 years, then it becomes more attractive to actually put your money in bonds to a certain extent than to put it in a stock market that is pretty much just going straight down. So I think a lot of the stock market moves by the end of the day today will actually revolve around the bonds. If the bonds continue to come down and hit new lows on the day, that's when the markets will likely, come down and also help hit new lows. Pretty much the S&P is down 3.74% and the bonds are down 3.6%. They're pretty much matched up, almost one-to-one correlation there. So mix all of that together, and that's why you're seeing a $16 drop today on the S&P and the NASDAQ that is down 5%. Now let's talk about AMC. Now, the shorts are in control of everything. They're in control of the markets. They're in control of AMC. Nothing is safe in this market environment. Now, I will say, through all of these volatile moves, all of this up and down market volatility, we're still pretty much at the same level we were just 2 days ago. Yesterday, slightly under that, yes, but we're roughly in this same range. We've moved around a lot, but we have not moved all too much in the grand scope of things. Now, if we do have a really bad day tomorrow as well, and this decline continues, then you're definitely going to want to watch that 405 level. That's going to be the main key. By the end of the day today, I want to watch the 410 level. If we break that and close under 410, that's where you're going to have some real issues on our hands. Now, as far as AMC does have earnings coming on Monday. So I hope we hold up above 15. I think we will. I think it's possible by the end of the day today. It obviously depends on what the markets do by the end of the day today. But nonetheless, if we do, I think that's going to be great. And I think AMC, to be quite honest, is going to surprise, and earnings are going to be a lot better than people actually forecast. Now, as far as the technical outlook, obviously I've said 15 a couple times, but that's going to be the key level you want to watch out for. The 200-day moving average is sitting at $14.76 per share. That's currently where we are at right now. So that is also the level that I want to watch for. It's kind of hard to see. It's a teal line. It's right where we are right now, literally right on the penny. So I want to see that. At least if we can hold that, that's going to be good. Again, that is actually just moved a little bit. It's at about $15. So that's going to be the key level that we definitely want to stay above. If not, then we potentially could fall as low as 13. I would watch that last low that we seen before the last Fed meeting. That would be the level that I would want to watch. Oh, and I'm on the weekly. Never mind. Scratch what I just said. Scratch what I just said. The 200-day moving average is actually at $29. 100-day moving average at 19, 50-day at 18, 13. We're off all these moving averages. Just watch the $15 level as well as $13. If we do see a big market bounce back tomorrow and then earnings are good on Monday, it's definitely possible that we make our way back up to the 50-day moving average. But I'm not going to hold my breath. Really, anything is on the table here. Even by the end of the day today, you might see a huge comeback, or you might see the markets fall into the ground by the end of the day. There's literally no in between. I think we're still going to move big from these current levels. Now, as far as AMC and the actual short interest, that is sitting at 19.13% by the end of the day today. Current shares that are sold short of 98.61 million, cost to borrow max of 2.73%. The utilization is at 100%. Days to cover sitting at 2.67. The option activity, looking at 4 orders totaling $1.08 million, positive order value of 6%. So not looking all too good. Lots of puts that are coming through, a lot of that artificial shorting activity, and that's what I mean by shorts are in control. There's a lot of shorting activity on AMC, on the broad markets. As you can tell, I don't think there's too many net sellers at this point. There is a lot of margin calls. Go ahead and pull this up. Just go to Google Trends. Like this is not super complicated. Because every time I say that, there's always somebody that's like, you're just pulling that out your ass, you don't know what you're talking about, all that good stuff. But we pull up margin calls. It's spiking pretty damn heavy right now, right? We pull up, just do 2004, right? So you're heading back up. You're in that that big zone, right? Like, if you just type in margin call, the only time we were ever higher than this was when the movie Margin Call came out in 2011, right? So you've been seeing margin calls, and that is helping to fuel some of the potential selling that we are seeing, because I don't think people are really inclined to sell a lot of these stocks that are down dramatically right now. But when you do get growth fears, that's where you can start to get people that really start to freak out, all things considered. Now, the Sanko tracker data sitting at about 10,600 calls that are in the money, 124,000 calls that are in the money for obviously, or out of the money for tomorrow. That could be good. If we do get a market bounce, you could see another 3% positive day. It wouldn't surprise me to ping pong back and forth for a while until we get some clarity about either inflation ticking down or the growth not leaving the economy. The next CPI report will be May 11th, and that will be, I think, the next big market catalyst. Now, all things considered, I would be very careful right here trying to come to a conclusion that the stock market is just going to continue to go down. In other words, I would not bet a huge amount of money on one direction or the other right now. Day trades, all that's different. You can make a killing doing that. Not financial advice. Do what you guys got to do. You're going to do what you want to do anyways. But I'm not convinced the stock market is in crash mode right now. Shorts are in control, yes. But until the actual fundamentals of these large companies that control the stock market, like Microsoft, great earnings, Google, great earnings, Amazon, bad earnings, Tesla, great earnings, Apple, great earnings. Like when those earnings actually fall through the floor and there's real concerns about these companies' growth, that's when you potentially will see the final crash. This is also a midterm year, so just be very vigilant of that. That tends to be a more positive return. So all things considered, be nimble here. Watch to see what the markets do by the end of the day today. If we close under 410, it could get bad tomorrow. If we bounce up from here, it wouldn't surprise me to close around 415 on the S&P if things do turn around a little bit. But also if the NASDAQ drops 7%, you're going to get halted for 15 minutes, at least on the NASDAQ. So that's going to be all for this video. That is what I have. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Come join us on the live stream, 10 p.m. to 11 p.m. Eastern Standard Time. We'll be live with a lot to talk about. So thank you for watching. Enjoy the rest of your day, and I will see you in the next one.